What's up, everybody? Welcome to Momo Insurance YouTube channel. This YouTube channel is designed to talk about everything insurance. Specifically for this video, I want to talk about completing the application and underwriting and the delivering of the policy. So if you're somebody studying for your life insurance exam, or just want to review or recap over completing the application, underwriting, and delivering the policy, be sure to stick around for the rest of this video. So here's just a brief chapter overview. So we're going to talk about insurance transfer, contract law, completing the application, underwriting, delivering the policy, and the USA PATRIOT Act and anti-money laundering. So, for the first topic, insurance transfer. The whole idea of getting life insurance is simply the art of transferring the risk of loss from an individual entity to an insurance company once the application gets approved. So pretty much you are protecting your family from anything that can happen to them, whether it be you pass away or you get injured or terminally ill. Life insurance, having a life insurance policy will transfer that risk of loss to the insurance company. Therefore, they will pay out your beneficiary a benefit cost or a death cost. So the next thing that we have is contract law. Contract law has elements of legal contract distinct characteristics of the insurance contract, as well as representation and warranties. And we will be covering these three bulletins in the next chapters. Next slides. So contract law. We have elements of a legal contract. So with any policy, you're going to have 4 legal elements within that contract. The first thing is you're going to have an agreement. An agreement is simply an offer in the application. Once the application is accepted and issued. So pretty much you're agreeing to offer something of value, whether that be money or assets. Whatever the case may be, it's a agreement. So both parties are offering something. The next one we have is consideration. It's the applicant's representation and premium, and the insurer's payment of claims. The third thing is we need competent parties. So in order to sit down and go through the underwriting process with an insurance agent, you must be of legal age, which means that you must be at least 18. You must be mentally competent. So you must be all there. You can't be mind wandering. You have to be present in the moment. You can't be somebody that has, I guess, quote unquote, special needs. You would have to be mature in the way of thinking. You also cannot be underneath any influence of drugs and alcohol, whether it be from taking a medicine that you were given from perhaps a surgery that you had a couple of days ago. Well, you could still be underneath some heavy drugs that causes you not to be mentally competent. So both of the parties have to be mentally and ethnically and legally of age to conduct a contract. The fourth thing is you must have legal purpose. You cannot go against a public policy. So those are the four elements of a legal contract. Perhaps in the test or the state exam, they are most likely going to ask you a couple questions about this. Another thing with consideration is something each party gives. And in consideration, you must agree to pay premiums. Okay, so next we have distinct characteristics of insurance contracts. So we have adhesion. You can either take it or leave it. That's on a take it or leave it policy. So pretty much once you get through the underwriting process and the insurance agent goes back, gets the final policy, there's no negotiation at that point. The policy that is written up is pretty much set in stone. If you don't agree with the policy, you do not have to take it. So the next distinctive characteristic that we have in the life insurance contract is aleatory, and that's a unequal exchange. So a great example I like to think about is, let's say if I pull out a life insurance policy, a whole life insurance policy, I'm paying perhaps $90 or maybe $100 a month for 7 years. So my policy may be worth maybe $25,000, but the death benefit or the cash value on the policy may be $100K or $200K. That's an unequal exchange. Is an unequal way of the policy. So it's kind of one-sided, which goes to the third one. It's unilateral. So it's a one-sided promise. So all I would have to do is pay up until 7 years, and let's say if I pass away, well, the beneficiary will be paid out over $100K or maybe $100K, maybe sometimes $200K. And the insurance company pretty much has to pay that out to the beneficiary, and they don't get anything in return. So that makes it an unequal exchange as well as a one-sided promise. The fourth characteristic that we have in insurance contract is conditional. There's a certain condition that must be met. And the last distinctive characteristic that we have is personal. And that is between insurers and the insured. Alright, so another aspect of life insurance policies or the application is representation and warranties. Now there is a huge difference between those two. So when you are underwriting or you're getting information about a potential client or applicant, you ask them questions. Depending on their answer, it can fall underneath two categories: a warranty or a representation. So, warranty is the absolute true statement, while a representation is statements that are true to the best of the applicant's knowledge. That does not necessarily mean what the applicant said, whatever the answer was exactly true. It's not, a representation is not guaranteed to be true, while warranties is a breach. So if you lie on a warranty, that means you have breached the contract, and the contract can possibly, well, the policy can possibly be voided. So warranties are taken more seriously because the applicant is supposed to tell the truth. They're supposed to say true statements, while representation has more leniency because it's true to the best of the applicant's knowledge. So when you're completing the application, there are 3 application parts. You have your general information, your medical information, and the agent's report. And you also have a couple things that you must remember to have complete before turning in the application to get processed. So you must have a required signature, and if there's any changes in the application, it's better to have them made before you send it off to get looked at by the insurance company. There are consequences of an incomplete application. So after you get done in the underwriting process, you want to make sure that the application is completed completely, so you don't have to go through the hassle of going back and having the applicant make changes on the application. Another thing to remember is you're either going to be collecting the initial premium or you're either going to be collecting the initial premium or waiting for a receipt, which it can be a conditional receipt. And then another thing you must be mindful is replacement. So we're going to go more into depth in the next few slides. Alright, so going back to the 3 parts of the application. The first part is general information. That normally consists of, age, name, address, birth date, gender, income, marital status, and application. So that's generally what we're looking for in the general part of the application. Next is we need medical information. The insurance medical background, their present health, and any medical visits that they have in recent years. So we would like to look at those reports just to get a better feel of where to categorize them in the amount of premium they will have to pay. We're also looking at medical status of living relatives and causes of deaths of the deceased relatives. The third thing in the application, the third part of the application, is the agent's report. This allows the agent to communicate with the underwriter and provide information about the applicant known by the agent that may assist in the underwriting process. So it's one thing to hear the applicant give, say information about what they do for a living, what their medical status could be, but it's another thing when you are actually in their house. So when you are going through the underwriting process, you want to be sure to look around, their house, their environment, to get clues as to building a better, report on the application or on the applicant's background, if that makes sense. So let's say if I'm going over to a potential client's house and, writing them up a insurance policy, and, I pull up and I see a motorcycle in their garage. And, I make a mental note of that. Oh, so this person, it's either him or somebody in that house that rides a motorcycle. Well, we know that motorcycles are it's a dangerous hobby. and people that ride motorcycles are more likely to get in deaths when it comes to car accidents than people in cars. So we just make a mental note of that. So when we're in the place, we're asking him questions, trying to get a better feel of who he is. And one of the questions is, do you have any hazardous hobbies? And he says no. Okay, cool. Well, he could be lying, he could be telling the truth. But let's say if we are looking around, because while we're in the house, we must be observant. We're looking around, we see a picture of him and that motorcycle that we saw in the garage that he said that he said it wasn't his, or he said he doesn't have any hazardous, hobbies. So we asked him, okay, so that motorcycle, you don't ride that motorcycle? Oh no, that's my brother's, he says. So from there on, we can kind of tell, we make a mental note, and we also put it in our agent's report that we did see a motorcycle in his garage, and we saw a picture of him on the motorcycle hanged up in his living room. So you can kind of put two and two together. So that's what an agent report is designed to do. It's designed for the agent to communicate any observations that they have during the underwriting process. Alright, so we discussed a little bit about the 5 must-knows to complete the application. So, you need to get required signatures. It's best to get them right then and there. Don't wait until the application gets approved. Make sure you thoroughly look at the application and make sure that the required signatures are there before you send it in. Alright, any changes on the application? If there's any changes on the application, it is not your job to cross out the changes and make them your own. That is not your job as an agent. Your job is to have the applicants make those changes on their application. Only the policy owner can make changes on the application. Now that is most likely going to be a test question if you have not taken your life insurance exam. Just know that that may be a question that they will ask you. Who is in charge of making changes on the application? It's always the policy owner. It's never the agent. Alright, now there are consequences of an incomplete application. So basically, I want you to remember, you want to make sure the I's are dotted and the T's are crossed, okay? So you want to really look through the policy and make sure that the applicant has put the appropriate dots on the I's and crossed the T's, that the application is filled out to its complete, it's filled out all the way. Just make sure that thoroughly look at the application. Alright, and then another thing is when you are collecting the initial premiums and issuing the report. Well, the receipt, excuse me. Issuing the receipt. So you have 2 types of receipts. You have the premium receipt and you have the conditional receipt. Well, the premium receipt is the type of receipt that is issued when the premiums are collected with the application. So you get the premium right then and there. While is a conditional receipt states that the coverage will be effective either on the date of the application or the date that the medical exam gets processed or we receive the medical exam, which occurs last, or whichever occurs last, as long as the policy is issued as applied for. So with conditional receipt, it may take a little bit longer because you don't get it right then and there. A lot of the times the applicant still needs a medical record to come through, or It just depends on whenever they want the policy to be put in effect. Alright, when it comes to replacements, if there is a mistake on the application, you need to throw the whole entire application away and get it replaced. So that's why it's so important that you thoroughly look over the application before sending it up to the insurance company to get processed. Alright, so now we're going into the underwriting process and what that looks like. So in the underwriting process, there's always an insurable interest. There's sources of underwriting information, risk classifications, and stranger-oriented life insurance and investor-oriented life insurance. We're going to talk about both of those. So with insurable interest basically is when you purchase life insurance with a premium, with the policy owner must have something of value, pretty much, that they're willing to lose. So to purchase life insurance, the policy owner must face the possibility of losing money or something of value in event of a loss. So there has to be some kind of substance of value, which I talked about earlier in the chapter. Insurable interest must exist between the policy owner and the insured at the time of the application. So that also plays into the fact of consideration, which I talked about earlier in this chapter of the elements. That's one of the elements. The second element of a legal contract. You're going to have some kind of form of consideration, which is giving something of value. Alright, so we have sources of underwriting information. Our main source that we utilize is the application itself. That's where we're able to get a feel of the individual applying for life insurance. The next thing is the agent's report. So I just mentioned that a couple slides back about the report that the agent will give the insurance company to let them know. Basically, it's like their notes. It's their observation or their impression of the applicant. Alright, so the next one is investigative consumer report, inspection. We're going to talk more in depth about all of these three. Alright, so sources of underwriting information. We have the Fair Credit Act. This pretty much protects the consumer. So the procedures that the consumer reporting agency must follow to ensure the records are confidential, accurate, relevant, and are properly used. So this protects the consumer against any circulation of inaccuracy or obsolete personal or financial information. So it's pretty much protecting the consumer. Okay, so the consumer's report is pretty much the consumer's reputation. It's the consumer's credit, character, reputation, or habits collected by a reporting agency from employment records, credit reports, and other public sources. So this is just to get a better feel of who you may be granting, money to, in a way. This is just to see their character, where their character is at, and if they are going to be able to get approved for the life insurance policy. So insurance agents can take it a step further and have an investigative report. So if there's something, maybe a case, maybe just something that doesn't sit right with the insurance company while they're processing or going underneath the underwriting process, they can actually have an investigation and interviews with associates, friends, and neighbors of the consumer. Now, these reports cannot be made unless the consumer is advised in writing about the reports within 3 days of the date of the report requested. So, yes, the consumer is going to have to be notified that the insurance company wants to conduct an investigative report. Alright, so the next one we have is Medical Information Bureau. MIB, nonprofit trade organization which receives adverse medical information from insurance companies and maintains confidential medical impairment information on individuals. So, like I said, in the 3 parts of an application, they want to know your medical information because that's going to give them an idea of how long you're likely to live. That's going to give them an idea of where you fall underneath risk, which we're going to talk about in the risk classification. It just gives them a better feel of where you are at health-wise. So like I just talked about, they're going to be able to get more information from the MIB about your medical records, your medical examinations. There are 2 main options when depending on the reason of the medical examination. So here they are down here. So the insurer may only request a paramedical report, which is completed by a paramedic or a registered nurse. And they can also, the underwriter may also request a physical or an attending physician statement from a medical practitioner. And this may be due to any prior medical problems. Another thing that the underwriting process or the insurance agent can get done, but it's not mandatory, is a HIV test. This is disclosed testing that they can provide for the applicant, and any results, whether it be positive or negative, is disclosed. They cannot share that with the insurance agent. They cannot share that with the insurance company. It does not have a huge effect on whether or not you get approved or not. Alright, so like I was just saying in the other slide about the use and the disclosure of insurance information, every applicant for a life insurance policy must be given a written disclosure statement that provides basic information about the cost and the coverage of the insurance being solicited. So, the applicant has that privacy. The insurance agent can't go around spreading information. All that is disclosed, which is a good thing. Okay, so another source of the underwriting information is, of course, health insurance, probability or portability, and accountability act. So this basically is protected health information. Like I said, your health information is not going to be out there for the public. This is very private, facilities, companies. They do not there's no disclosure without individual authority to the public health authorities, authorization. So your information will not be out there for the public. Okay, so moving on to the risk classification. There are 3 types of risk classifications. We have the preferred, standard, and the substandard, also known as high exposure. So the first one is preferred. That's the one that everybody should aim for. So that is above average. So if you have a preferred risk, you're going to be paying way lower premiums than standard and substandard. And that's because in their eyes, in the insurance company's eyes, you're going to have a long, healthy life. So these are individuals that, so one of the things they look at is your weight, your height and your weight. So let's say we have an individual, a male, that is 6 foot. And he weighs 180 pounds. Well, he is quote unquote underweight, but he would be the preferred risk classification because he is underweight. So in their eyes, they're going to live longer than somebody that is at the correct weight, which is more of a standard risk. So persons who, according to the company underwriting standards, are entitled to insurance protection without extra rating or special restrictions. So, in the insurance company eyes, they don't have health problems like a substandard risk. And they really base this off of height and weight. That's the main thing that they base it off of. There are other factors too, like let's say if I am underweight, but I have a hazardous hobby, then I may be standard risk because that can knock off some points. Because let's say if I do bungee jumping or skydiving or something like that, well, that's considered a hazardous hobby, so they may bump me down to standard risk. So the other one that we have is substandard or high exposure. These are normally applicants that are not acceptable to standard rates because of their physical condition, personal or family history of disease, or it may be their occupation or their dangerous habits. So, like I said, there are other factors that play into it, but the main one is your height and weight and your physical or your health conditions. Alright, so moving on to stranger-oriented life insurance and investor-oriented life insurance. So, stranger-oriented life insurance is literally somebody that you have no relationship with pulling out a life insurance policy for you. So this is a life insurance arranged in which a person with no relationship to the insured, a stranger, purchases a life policy on the insured's life with the intent of selling the policy to an investor and profiting financially when the insured dies. Now, believe it or not, a lot of insurance agents do this. They will go up to somebody that they don't know and offer them a deal. Say, oh, if you go and you pull out a $100K life insurance policy, you can get 25 or 50K up front, and then you can make me the policy owner. This is the insurance agent saying, you can make me the policy owner, and when you die, I'm going to be the beneficiary. of that, because pretty much, I mean, if you're selling your life insurance policy to an insurance agent, they become the beneficiary, because a lot of times they're going to make themselves a beneficiary. And a lot of the times this happens in the world of insurance agents. You have a lot of insurance agents going up to strangers and making them a deal. The stranger purchases life insurance because they want that quick $25K or $50K, and they sell their life insurance policy to somebody they don't even know. So it happens a lot. And you may ask yourself, why would a insurance agent do that? Well, because they profit financially. And not only that, they can sell your insurance policy to investors too. So it's a win-win in their eyes. Now, I think it's in the 5th or 6th chapter where we'll talk about the rule that they have. It's pretty much a 75-25 rule or something like that, where your first year you can't sell to a certain amount of strangers, or it's a percentage. We'll talk about it in a different chapter. Alright, so the next kind of life insurance is investor-oriented life insurance. So it's pretty much where a third-party investor who has no insurable interest in the insurance initiates a transaction designed to transfer the policy owner rights to someone with no insurable interests in the insured, and who hopes to make a profit. So similar to the Stranger-Originated, but the difference is it has a investing component to it. So they pretty much want to have that. They want to have policy ownership rights to invest it, whether it be in annuities or in stocks or whatever the case may be. Okay, so we're going to talk about the delivery of the policy. The buyer's guide. So when you are first presenting the policy, you want to talk about, or you want to give them a buyer's guide, which provides basic and generic information about the different policies and compares the different policies and just gives them an overview on the different policies so they can see which one they feel like fits their needs best. The next thing is a policy summary, which is a written statement describing the features of the features and the elements of the policy. So this is normally given around the end of the policy, or the end of the delivery of the policy, and is more in depth because you want a specific information about the policy. It usually provides it's usually provided prior to or at the policy delivery. It must include your name, your address, the name and the address of the agent, and the full name and the full address, and the full name and the full address of the home office or the administrative office. This can also include any premiums or cash values, dividends, surrenders, values, and death benefits for a specific year. The policy summary must be provided when the policy is delivered. So this is pretty much received in the delivery process, while the buyer's guide is presented at the time of the application. So there may be a question or two in your state exam about, the difference between buyer's guide and policy summary. Alright, so when does coverage begin? And they do ask a couple questions in the exam about when the policy begins. So here are three main things. If the initial premium is not paid with the application, the agent must also be required to state a good health from the insured. So they must do this before the coverage starts. So they must give out a statement of good health from the insured. That lets the company or the insurance know that it's safe to begin coverage. The last point is if the full premium was submitted with the application. So here's a little diagram that I inserted. So we have the application completed and signed. Alright, so what premium received at the time of the application? Was there premium received at the time of the application? Yes. So if it's yes, then the policy is issued. And the start of the coverage is the date of the application. So let's say the premium, was the premium received at the time of the application? No. Was the policy issued? Yes. Okay, so at that point you will have to collect a premium and a statement of good health. And then the coverage will start at the date of the delivery. But it's important to have the statement of good health before you even send out the premium. So you need to have that. So it pretty much is giving them the okay to begin or start the coverage. So you give the statement you have to give the applicant the statement of good health before giving them the paper to sign, and collect the premium or the check or whatever the case may be. Delivering the policy, so make sure you get that statement of good health copy out to the applicant before they sign, any check or they give you any form of premium, any money. You need to make sure that you have the good health statement or the statement of good health from the insured. Yes, make sure that you give that to them or a copy of it. And that should normally be at the back of the application. Alright, so next we have, this is the last thing, is the U.S. PATRIOT Act and the anti-money laundering, and that's pretty much protecting us against tourist activities. So just making sure that we are acting ethical and not, doing illegal stuff. Like, just doing weird stuff, like having fake IDs, or just breaking the law. Alright, so this pretty much concludes the PowerPoint. If you have any questions, comments, concerns, be sure to leave it down below. Be sure to check out some of my other videos if you haven't already. If you feel like I deserve a subscribe, make sure to subscribe. And also, if you have not joined a life insurance team, somebody that can get you coached and put on the right direction, be sure to hit me up on Facebook or Instagram, and also be sure to check out my link down below. I'll see you on the next video. Peace.